Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
So today we're going to talk about the Las Vegas real estate market. Specifically, this is sort of a mid-month update. We said months ago that this is the time of year when we would have a better idea what's going to happen next year within the Las Vegas real estate market. Because what happens normally this time of year? Like, what is the thing that happens this time of year usually?
Buyers and sellers hibernate.
Okay, buyers and sellers hibernate. From the spring to now, every single year, the number of listings in the MLS increases. Happens every year. And then it reaches a peak, and then it starts declining. And it declines literally into the spring. And it happens every year. We have a chart to show you later.
Right. So what happens is in the fall and winter, and this is climate agnostic. So what I mean by that is it's not just in places where the weather's cold or wet or snowy. It's really just throughout the country. And I think it probably has to do partly with the climate in places. And overall, it just has to do with the season as far as people being more focused on family, on Thanksgiving, on Christmas, whatever holidays they're celebrating.
Yep.
And so they put the house shopping and house selling on the back burner until the beginning of the year.
Right. The way we track this is with this thing called the Market Action Index. This is sort of the bellwether thing. And I'm going to put up this chart right here. So as you look at this Market Action Index, one of the things you notice is that every month we've been checking this for the last 4 or 5 months, the Market Action Index has been declining. And as you look at this right now, it's at 33, but a month ago it was at 33. So what that means is this index has not changed. It hasn't gotten worse. It actually, at one point, was 31 or 32. So it's actually, but remember, we're measuring month over month. So it went down a little, but came back up. So actually, this is improving. The market's actually, although it's not, it's improving slightly. And we're going to show you why when we go through the numbers. Now, what I'm going to do here, I'm going to show you the Market Action Index over the last 3 years. Now, if you look all the way to the left, that's a normal market. That's where the Vegas market is normally. When you see the upper end, that's a hotter market. So the last 2 years has been a hot market. You also see that it goes up and down like a wave, right? It's hot in the market's hot in the spring and it's slow in the fall. And then it transitions every year. What you see here is you can see it leveling off and getting ready to, the Market Action Index to start increasing. What this indicates is highly likely over the next 6 months, we will start to have a market that turns more into a seller's market, which people are saying, no, that can't happen because interest rates are high and the Fed's still raising rates. But the truth of the matter is, when you look at this chart, before every time the market changes, you see these spikes up and down of the leading indicators. So you can see July 2021, the market spiked up and down, and then the Market Action Index went down, and then it spiked a bunch of times, and then it went up, and then it spiked a bunch of times, it went down. And look at what it did. It just spiked a bunch of times. It kind of got volatile, and you can see that it leveled off, and it actually starting to turn up a little bit, which is what people told you wasn't going to happen. It's actually starting to happen.
Right. I mean, we're not saying that interest rates are going to be down to 3% next year. That's not where this is going. All we're saying is that the market has, at the very least, stabilized. If not, it might be getting close to turning the corner and getting back to a more normal market and getting back to a better position for sellers.
Okay, the next thing we want to show is, like, you're saying, well, why is this happening? Because I keep hearing bad news. Well, that's fine that you're hearing bad news, but let's look at what's actually happening. So this is the inventory level in Las Vegas. Now, if you look all the way to the left, that was 2019. Okay, you can see we're basically back to where we were in 2019, this time, same time of year, 3 years ago today. The inventory is where it was. But if you notice, there's that little spiky thing that it's coming down. We actually have a slight decline in inventory over the last 7 days. I'm going to zoom in and show you this thing here. Inventory on October 21st. Now, this is just Las Vegas. So when you hear somebody say, oh, but I heard Las Vegas had 11,000 houses, that's because somebody pulled the entire MLS, which includes Henderson, North Las Vegas, Boulder City, and a bunch of other areas that are not the city of Las Vegas, not Las Vegas. We went from 5749 to 5275. We actually have less inventory. What the problem is that without high inventory, we can't really have the market go away, meaning it can't collapse or crash or anything like that, right? Because what does it take? What's the ultimate thing, Oana, that causes downward pressure on real estate?
Supply and demand. So if we have, if we consistently have a lot more inventory than we can absorb, then that puts downward pressure on prices. But as far as the point that I made earlier, as far as both buyers and sellers hibernating, this is kind of what you're seeing. Is you're seeing decreased inventory numbers, but you're not seeing an increase in transactions, right? You're not seeing an increase in the number of properties being purchased either. So you're seeing low activity on the buyer end, low number of houses coming on the market or staying on the market. And like I said, it's a seasonal thing because of the holidays. You're going to see, again, lower numbers as we head into Thanksgiving and into Christmas. So if you are a home seller, this could be an opportunity for you as far as not having as much competition. If you're a home buyer, then, again, this could also be an opportunity for you because, again, not a lot of buyers out there, so you might not have as much competition. Although as a home buyer, you're not going to have as many choices, and as a home seller, you're not going to have as many buyers looking at homes.
Now, somebody had posted a comment saying, but we heard that this is the most inventory that there has been in 3 years in Las Vegas. Well, 2020, 2021, and 2022 so far have been the hottest real estate markets since 2006. So the last 16 years, the last 3 years have been super hot. That inventory, yes, it's because we just got back to a normal market. We're going back to a normal market. Now, I'm going to show you this next chart. This is average days on the market. Now, if you look at the left half of this was the amount of time on the market. This is a normal market. You could see between 100 and 120 days on the market, right? We're still below that. We still are below, but you can see that we're just approaching a normal market. This is not, people are so focused on the rise, they're like, oh my gosh, the sky is falling. But this is because we're going back to normal. We said this for months. We said for months we would get back to a normal market. It's happening. It just happens to be happening quicker than it normally does because we went from such a low, right?
Right, yeah. And, long term, the market's obviously going to improve because the market always does. Whether it improves dramatically enough for your needs, that's a different matter. But, the market looks like it's at the very least leveling off, if not turning the corner and looking to improve in 2023. Yeah,
so here's another chart I want to show you. This is price per square foot. And this is in 4 market segments. So that top blue line is the top quarter. This is what we'll call it the luxury. Probably it's stuff 800,000 and above. And then the bottom 3 lines is the rest of the market. Now, first of all, the baseline number is not zero. It's $100 per foot. So if you raise these even more, you can see that we have had price per square foot declines, but we have that pretty much every year from the spring to the fall. And if you look at this chart, you can see that even in 2021, in the hottest market, you had that slight down where the price per square foot went down. You had it in 2020. Okay, we've had it more substantially because interest rates went up and a bunch of others, and the market was pretty hot. But what you notice is, especially in the top quarter of the market, do you see how it's starting to level off? And also with the rest of the market, that price per square foot decrease is actually is trending less and less. Look, it looks like it's going to go back to zero and then start going up again.
Right. Yeah. So, this is just another indication that the market is finding its equilibrium. It's kind of finding its footing, and it's not in a free fall.
Okay, this next one we're going to show, this is properties with price decreases. Everyone got focused on this about all the list prices that were properties. So many properties have had price decreases. And if you look at this chart and you go all the way to the right, you can see that in a normal market, we always have homes with price decreases. We didn't have them the last 2 years because it was a super hot market. So you would put your house on the market and get an offer. You didn't have time to do a price decrease.
Well, the other reason for the price decreases is because a lot of these sellers looked at what was happening in the spring and they wanted those prices today. And that's not the market that we have. We don't have the same interest rate that we had in the spring. We don't have the same frosted market. We don't have the same number of buyers scrambling for property. So to expect that price level today, when you don't have all the other factors, that's not reasonable. And so what happens is these sellers come on the market and then they get a dose of reality, right? They don't get very many looks at the house, if any. And then they start doing these price decreases until they find that spot where their home is being looked at by buyers and buyers are making offers.
If you also look at that chart, notice that you can see it's going to level off. Like it's turned the corner. The properties with price decreases are starting to turn. I predict we'll be by next spring. You won't see that number where X percentage of houses have price declines. I think we're going to get back to people list their house. Some people have to reduce it, but we start to get offers again. This is cyclical. This happens every year. It was more exacerbated this year, but we have been saying for a long time that this is a short-term problem because of interest rates.
Right. And remember, interest rates are causing this short-term problem, but inflation is also, and it's going to sound kind of sick, but is also kind of helping stabilize these prices to some extent.
Yep.
Because we are seeing wages going up. We are seeing people getting accustomed to inflation and looking at that and saying, hey, I want to get a better control on my housing costs because everything else is going up. If you have pool service or if you have whatever services you have, you're paying more, right? Every time you're going to the grocery store, you're paying more than you were paying maybe just a few weeks ago. Everything is costing more. So people are looking for a place to say, hey, this is a cost that I can control, a cost of living that I can control. And the price of housing is one of those costs that you can control by having a fixed rate mortgage.
And the other thing too is rent is going up. Mm-hmm. Rents are going up. People are tired of having rent go up. They're willing to pay a little more in a mortgage that they can refi in the future rather than keep paying somebody else's mortgage and have them build all the equity.
Right. So the thing to keep in mind is, I think it's pretty well accepted that by 2024 rates are going to be possibly more affordable than they are today. And so if you're purchasing a house today, maybe you're going to go through the pain for 18 months with a higher rate and then be able to refinance. That there's no guarantee, but it's just likely.
I'm going to put this chart back up because this is the one we've referenced before. This is the number of homes for sale nationwide. When you see that there are more homes on the market, look at this chart and just remember, this is historical. This is the last 40 years. We still have the least number of homes except for a few months ago. This is the lowest number of homes in the U.S. that we've ever had on the market. And even with interest rates being relatively high for the last few years, they're still historically not out of line. They're still below the long-term interest rate. We still have less than a third of the homes that we had on the market at the peak, which was there. It shows July 2007. Mm-hmm. You can see every year, spring, summer, spring, summer, spring, summer, the number of homes go up and down. All the people that said that they say this every year, every time the inventory goes up, market crash. Oh my God, the inventory is going up. Now this is the time when the home prices are blah, blah, blah. This is a big head fake. We just showed you that the inventory in Las Vegas is starting to level off. It's likely, highly likely, that when we do our update video that we do them every month, by the time we're doing February, March, and April of next year, mm-hmm. we will be through this thing. Mm-hmm. I'm going to say right now, we called this. We said last year that the inventory would increase, but that it would decrease again by the spring. We even said, if you look at our May and June updates, when we saw the inventory starting to climb, we said we would know for sure by the fall, but what we expected was it would level off at some time and start to fall again, and it's doing exactly that. Mm-hmm. The other interesting thing is I've noticed a surprising absence of market crash videos because all the horrible things that have been said for the last 6 months have not materialized. yes, inventory got soft. Inventory rose because interest rates were going higher. Institutional buyers are still buying. Invitation Homes is raising money. We've got other funds that are raising money right now to buy real estate.
So to that point, institutional purchasers like Invitation Homes, they're raising money to buy homes, but they're not deploying the money right now. They're still waiting to see kind of how things hash out, so that in the spring, when there's more inventory, when they have better choices, that they'll come back in and they'll purchase homes. And buyers are going to be in a position when these institutional buyers come back to be competing against them again, with these people or these institutions purchasing properties with cash offers, 7-day close of escrow, and that sort of thing. So that is something that buyers, I think, are keeping in mind. And I think that's part of the reason why we are seeing this leveling off and possibly this turn of the market to an improvement, because I think buyers realize that. They realize that this is actually an opportunity for them to purchase without a lot of these huge buyers in the marketplace that are purchasing homes quickly in 7 days. There are not that many of them playing out there right now. There are certainly a number of them, and we do get offers like that all the time, just not as many as we used to. So I think buyers are seeing that opportunity. But on the flip side, like Todd said, these buyers are not by any means going away. They are simply raising funds to keep doing it and keep doing it on a larger scale. They also do it market specific, and we've talked about that. The market has to meet certain benchmarks for them to want to be involved in those markets. And so if you are interested in that, we talked about that quite a bit over the summer as far as what those benchmarks are. So go take a look at some of the videos we did over the summer, and we do go at length into some of those benchmarks.
Make sure, if you're not a subscriber to the channel, please subscribe. We're going to do another update in 2 weeks. We'll probably do 2-week updates at least through January or February, because we want to track it sort of in real time, the change of the active amount of inventory and then the price per square foot of homes. Because here's the thing. The question we get all the time is, when should I buy? And we've always said there's never this whole when should you buy is not a question. Like, it's not like Tesla stock at some point will be like at the bottom and then it goes back up, right? Because here's the bottom line. If you didn't buy a house in 2008 or 9 or 10 or 11 or 12 or 13, those were all good times to buy. 14, 15, 16. Like, you would have been better off buying a house in 2009, 19 and 20, right? Because the home prices were less then. They're higher now. So this idea that home prices are going to be like a great time to buy, here's the bottom line. I don't know what home prices are going to be next month, 6 months, or a year. But in 5 or 10 years, they're going to be higher. They're going to be higher, because you could go through almost any time in history and look out 5 years in the future, 10 years in the future, they were higher. If you bought a house at the top of the market in 2006, boy, you took a beating. But you were back up on top by 2016, and now you're 50% up. And that's like literally the worst. They said the worst time that you could have ever bought a house was in 2006. So here's the bottom line. Building on what Oana said, if you are waiting until you think it's the perfect time to buy, the institutional investors will have already started buying, and you're basically screwed. Now, we're not saying run out and buy, because we get a lot of criticism saying, oh, you just wants to buy a house. How does that help? If you buy a house, how does that help us? Like, we list homes. When you sell your house, we list it and we represent you as a seller. That's how we make money.
Right. So, look, there are lots of opinions out there. Listen to all of them, and you make the decision based on what you see out in the market. Does this make sense? Does the sky's falling make sense? What makes sense to you? If you enjoy this video, please subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.